Alibaba just released their latest quarterly figures, and if you're going to look at the headlines, if you're looking at pure dollar amounts, then it's a double beat. If you're looking in the Chinese currency, then it's a small miss on revenue and a beat on earnings, just so you know. At the time of making this video, the stock is up 3.20% or so. Year to date, the stock will be up over 20%. And at one point, a couple of weeks ago, when all the stimulus talks were going on, the stock was up actually 54, close to 55% year to date. Now we'll have a market cap of close to $210 billion and a forward PE of just 10.2 times. EV to sales 1.4 times and EV to EBITDA 7 times. If you look at what the analysts are expecting Alibaba to do in the coming fiscal years, these are the numbers here. Sales growth of around 7.5% or so, fiscal year 25, 26, 27 on average. And then EPS growth for fiscal 2025, barely growing 1.2%, then reaccelerating in fiscal 2026, 11.5%, and then closer to 10% growth in fiscal 2027. The current average analyst price target sits at $120.3, representing 32.8% upside from the price we're at today. There are 45 analysts covering this company, 0 with a strong sell, 0 with a sell rating, 7 with a hold, 30 with a buy, and 8 with a strong buy. And as you can clearly see here, the major price target increases happened, well, guess what? After the stock went up. One last thing I want to show you before we jump into this report is the fact that in the last 2.7 years, shares outstanding have come down by 16%. So let's go over the report. Share your thoughts down in the comment section below. Are you a holder of Alibaba, maybe JD, maybe Pinduoduo or Baidu or any other Chinese stocks? What do you think about investing in Chinese stocks right now? We've gone over the super investors yesterday. A lot of them have been adding, well, not a lot, but some of them have been adding quite a lot to their Chinese positions and even opened new ones. So let me know what you think about that in the comment section below. Like, subscribe, do all of that. And if you want to support me even further, do check out the link down in the description and the pinned comment to the top 10 best stocks to buy now, or go to fool.com/couchinvestor. Thank you very much. All right, so let's first start off with a couple of comments here from management. So this quarter, we continue to invest in the user experience and strengthen product offerings to serve our customers. We entered into long-term collaborations with industry peers to broaden payments and logistics services on Taobao and Tmall platforms, which we expect will accelerate our overall growth. Growth in our cloud business accelerated from prior quarters, with revenues from public cloud products growing in double digits and AI-related product revenue delivering triple-digit growth. We are more confident in our core businesses than ever and will continue to invest in supporting long-term growth. Our other businesses continue to improve their operating efficiency, with most of them continuing to increase their profitability or reduce losses. Our revenue growth this quarter was driven by improving monetization of Taobao and Tmall Group, which included GMV-based service fees and merchants' adoption of our marketing tool. I can't even mention that. Consistent with our strategy, we continue to invest in our core business while enhancing operational efficiency. During the quarter, we repurchased $4.1 billion of shares, achieving earnings accretion to our shareholders through a net 2.1% reduction in total shares outstanding since the end of June. And so here we've got the major overview by Consensus Gurus, great follow on X. Basically, lots of beats. We've got some small misses. So here, like I said, if you look in dollars, it's a beat for revenues. If you look in the Chinese currency, it's a small miss of 1.2%. Smart Logistics also missed by 8.3%. And then the other big miss to me is this one right here. Free cash flow missed by 61.5%, and it's basically down 70% year over year. So let's discuss that. We've got the China commerce segment, which is Taobao and Tmall Group, that only increased 1% year over year. Cloud intelligence continued to reaccelerate, so we're now up 7% year over year. The international side, AliExpress, Trendyol, Lazada, etc., that grows quite nicely, 29% growth there. China Smart Logistics up just 8%. It was growing much faster before, now just 8% growth. So overall, revenue increased 5%. Income from operations is also up 5%. Net income is up 63% year over year, and diluted earnings per share is up 69% year over year. Now, as for free cash flow, as you can see right here, it's down quite a lot, right? 70% year over year. And they say the following. The decrease in free cash flow was mainly attributed to our investments in Alibaba cloud infrastructure, refund to Tmall merchants after we canceled the annual service fee, and other working capital changes related to factors including scale down of certain direct sales businesses. Okay, then I hope we can see a reacceleration in growth for free cash flow in the next quarter. And so looking at each business segments and looking at the adjusted EBITDA and the change year over year, Taobao and Tmall Group adjusted EBITDA is down 5% year over year. Cloud Intelligence Group is up 89% year over year. We're going to look at the explanation in just a second, just so you get a major overview here. The international segment, that's down 657% year over year. China logistics side down 94%. And then local services group up 85% year over year. Digital media and entertainment, that's up 11%. As for the share repurchases, so during the quarter ending September 30, they repurchased a total of 414 ordinary shares, equivalent to 52 million ADS, for a total of $4.1 billion. As of September 30, they had 2.327 million ADS outstanding, a net decrease of 405 million ordinary shares compared to June 30. Well, a decrease of that number right here, 18.62 million, or a 2.1% net reduction of their outstanding shares after accounting for shares issued under our ESOP. The remaining amount of their share repurchase program was $22 billion. And as long as the company remains cheap-ish, right? All things considered, on all pricing metrics, on all metrics, let's say, Alibaba is cheap. It is cheap because, yes, it's a Chinese company, etc., etc. Okay, especially now since Donald Trump is going to be president. Although, if you check the charts before the first term of Donald Trump, the stock went down, and then during his first term, the stock went up. So, yeah, maybe we will see the same thing happening right now. I don't know. Anyways, continuing here on the explanations for each and every segment. So, Taobao and Tmall Group. During the quarter, online GMV growth was supported by double-digit order growth year over year, mainly driven by the increase in purchase frequency, partially offset by the decline in average order value. In October and November, we had a successful 11/11, that's the Singles Day there, global shopping festival, during which Taobao and Tmall achieved robust growth in GMV and record number of purchasers. The number of 88 VIP members, our highest spending consumer groups, continued to increase by double digits year over year, reaching $46 million during that quarter. Now, with regards to the adjusted EBITDA decrease here, that was primarily due to the increase in investment in user experience, partially offset by the increase in revenue from customer management services. As for the cloud one, overall revenue excluding Alibaba consolidated subsidiaries increased by 7% year over year, mainly driven by the double-digit revenue growth of public cloud products, including AI-related products, partially offset by the decrease in non-public cloud revenue as they transition away from the low-margin project-based revenues to focus on high-quality revenues, which is why you're also seeing the huge increase in EBITDA. So that was primarily due to a shift in product mix towards higher-margin public cloud products, including AI-related products, and improving operating efficiency, partially offset by the increasing investment in customer growth and technology. As for the international side of things, the huge decrease here in adjusted EBITDA was because of this, primarily due to the increase in investments in AliExpress and Trendyol cross-border businesses, partially offset by Lazada's significant reduction in operating loss from improvements in its monetization and operating efficiency. Moving to the logistics network, which is Cainiao. So Cainiao Express started providing logistics services on other e-commerce platforms in October, further expanding its market reach. So we had this announcement, JD.com and Alibaba's logistics interoperability upgraded again. Cainiao officially settled in JD.com's third-party platform. With regards to the adjusted EBITDA here for that segment, the decrease of 94% is primarily due to the increased investment in cross-border fulfillment solutions. So looking at the chart right now, of course, Alibaba back in September all the way to the start of October had an incredible run. It was a bit overbought, but then again, being overbought, as you've seen in the past couple of weeks, you can stay overbought for a long period of time. But okay, the China, let's say, trade ended right here. Stimulus, hype, etc., faded away. Then Trump presidency, fears of that, waiting for more stimulus maybe, and so the stock went back down to around $90. Yesterday, we're now at $93. I mean, we're going to try and maybe go above the 50-day moving average, which sits at $96.5, and the 20-day one at $98.8. The 200-day one sits at $86.3. So yeah, if we go lower for some reason or another, then that would be the area where I would like to see the stock rebound. So overall, I mean, it's the same thing, right? It's a good business. It's a good business. The stock is a stock. It's a Chinese stock. If this was an American stock, it would probably be worth $200, if not more, right? But it's not. It's a Chinese one. And I know, oh, you don't have voting rights, you don't have the same rights, etc. Okay, but I think that most people that buy Chinese stocks buy it because they think it's undervalued, and eventually the market will figure it out, right? And I mean, the market has probably already figured that out because it's not trading at $60 anymore. It's at $90. It was at $115, $120. So the market knows when it wants to make money, it will make money. And I think that's the same case here with Alibaba, with JD, with Pinduoduo as well. Most of us probably don't really care about, oh, voting rights. We just want to see that number, $90, be up to 100 to maybe 200 in a couple of years. If I don't get to vote on stuff, I don't care. I'll cash out at $200, make some money. Thank you very much. So overall, that's about it. Do share your thoughts down in the comment section below. Like, subscribe, do all of that. And I'll see you all in the next one. Bye-bye.